When you look at a stock chart, you're really only seeing part of the story. And today, we're going to peel back the layers on one stock, BBAI, where it looks like a serious battle is brewing just under the surface. This is the anatomy of a potential squeeze. So let's just start with the big mystery, the question that really gets this whole thing started. How is it even possible for a whopping 84% of a stock's trading to happen completely in the shadows, totally off the grid from public exchanges? I mean, just look at that number, 83.85%. Let me put that into perspective for you. For every, say, 10 shares of BBAI being bought and sold, maybe one or two of those trades actually happened on a public exchange like the NASDAQ. The other 8, yeah, they happened behind a curtain. All right, so let's pull that curtain back and talk about this hidden 84%. To do that, we have to talk about something called dark pools. And when you see the raw numbers, it's just incredible. Out of about 133 million shares traded, a staggering 112 million of them were swapped in these private venues. Only 21 million showed up on the public ticker for everyone to see. The difference is just, it's massive. So what in the world are dark pools? Well, think of them like a VIP room for the stock market. They are totally private exchanges where the big players, hedge funds, institutions, can trade enormous blocks of shares without tipping off the public market and causing the price to spike or crash. It's all about making huge moves in secret. Okay, so why to do this? What's the game here? Well, the theory is pretty straightforward. It's called accumulation disguised as weakness. The big money might be trying to make it look like the stock is weak and everyone is selling. That scares regular investors into selling their shares right into the hands of the institutions who are quietly buying up everything they can at a discount. Now, let's add the second ingredient to this whole volatile mix. Let's call it the squeeze fuel. This is where things get really interesting because we've got a clash between a ton of people betting against the stock and a serious lack of available shares. The official short interest is just shy of 25%. That means that nearly a quarter of all the company's publicly available shares have been borrowed and sold by traders who are betting that the price is going to go down. And what does that 25% mean in real terms? It means 92 million shares. That's how many shares the short sellers at some point absolutely must buy back from the market to close out their bets. There is no way around it. But, and this is a huge but, here's where the problem kicks in for them. According to the data, there are only about 500,000 shares even available for them to borrow right now. And this just lays out the insane imbalance. You have a demand for 92 million shares that have to be bought, and a supply of just 500,000. It's a tinderbox. Any little spark, any little price increase could set off a massive panic as all those shorts scramble to buy back shares that, well, they just aren't there. So we've got the secret buying. We've got the short squeeze fuel. Now, let's add a third, incredibly powerful force into the mix, what we'll call the $6 options magnet. This is where we dive into concepts like max pain and the explosive potential of a gamma squeeze. So first, what on earth is max pain? It's simply the stock price where the folks who sell options, usually the big market makers, make the absolute most money. It's the price where the greatest number of options contracts just expire completely worthless for the buyers. It is the point of their maximum profit. And for BBAI this coming Friday, the max pain price is exactly $6. So since the stock is trading below that level right now, there's this huge financial incentive for the market makers to kind of nudge the price up towards that $6 mark. It acts like a powerful gravitational pull. But what if the stock doesn't just hit $6? What if it blows right past it? Well, that's when you can trigger something called a gamma squeeze. See, as the price rockets up, those same market makers who sold call options are suddenly on the hook for huge losses. To protect themselves, to hedge their risk, they are forced to start buying shares, and their buying pushes the price even higher, which forces them to buy more shares, and you get this explosive upward feedback loop. Okay, so with all these wild forces swirling around, what does this actually look like on a stock chart? Well, the technical signals are pointing to what looks an awful lot like a textbook bear trap. The analysis we're looking at uses a fantastic analogy for this, and it centers on an indicator called the Chaikin money flow, or CMF. Here it is. Think of the stock's price as the wave you can see bobbing up and down on the surface of the ocean. But the CMF, that shows you the direction of the deep, underlying tide. It shows you where the real money is actually flowing. And this is exactly what a bear trap looks like. The price, the wave on the surface, was going down. It looked weak. It looked like a sell-off. But at the exact same time, the CMF, the tide underneath, was steadily rising. That's a huge signal that the price drop was just noise, designed to shake people out, while the smart money was quietly flowing in and buying. Okay, let's put all the pieces of this puzzle together into a practical roadmap. Based on all these forces, what are the actual key price levels that you need to be watching? So the analysis really lays out two main possibilities. Let's look at the top one first, the bullish green day scenario. The trigger here is a clean break above $5.52. If that happens, the next targets are $5.81, that big $6 magnet, and then potentially $6.62. Now, on the flip side, the red day scenario. This is seen less as a reason to panic and more as a potential discount, a buying opportunity, but only if the price holds that critical support level of $5.31. A break below that, and all bets are off. So this whole thing is building up to what looks like a final showdown. What we're really watching is a head-on collision between two incredibly powerful market forces, each one trying to pull the stock in a different direction. So, to boil it all down, here's the cheat sheet. If you remember nothing else from all this, remember these three numbers. $6 is that breakout trigger, that big options magnet. $5.52 is the pivot point that confirms the bulls are in control. And maybe most important of all, $5.31 is the critical line in the sand, the floor that absolutely has to hold. And that leaves us with one last fascinating question. Which of these powerful forces is going to win? Is it going to be the purity of the technical chart, which says $5.31 is the floor? Or is it the raw, brute financial force of the options market, trying to pull this thing up to $6? The outcome is going to be very, very telling.